Windy Mumbai, chilly, 32 last week.
Chilly by Mumbai standards. You've forgotten you're a Delhiite. You made it through 3 degrees, 2 degrees kind of temperature.
Yeah, but I think markets are less volatile, weather is more volatile. Just think about it. Last week I think I read somewhere that it was the hottest Feb. 30 plus.
Yes.
And in the morning,
March
coldest March so far. So that's real volatility, like a 10 degree swing.
Absolutely. Upper circuit to lower circuit, call it what you may. But for the Nifty, we've managed to stuck ground. We've managed to hold on and stay put to that, record high levels. Very, very narrow, tight range is what we've been flickering in. At least that was the case yesterday. So around the 22,400 odd print, and that doesn't really give you any reason to complain. We've managed to gain for a fourth consecutive session. Yes, the small and mid caps, that underperformance as well has come to the fore. It's not starkly, a big gap between what the large cap and the broader market universe is doing. But yes, the underperformance clearly is at play now. It's clearly large caps at the fore. And the Nifty Bank is managing to hold on to that 1 month high. It was energy and pharma which made record highs yesterday. And I think the silver lining is that unlike the weather, the volatility in the markets, the India VIX has cooled off.
Markets are right now moving as per the script, which is that the churn in large caps or churn towards the large cap is visible. Small cap stocks are underperforming. We had a big Friday, half day, which was Saturday, and a quiet Monday. And that is what you want. You want markets to consolidate, give you one big day, then consolidate, and then move, then inch higher or move higher. So large cap stocks, I think, are moving as per the script. So nothing wrong with the setup. Globally also things are moving as per the script, which is that interest rate worries are taking a back seat. Equities, they continue to outperform. The rising tide phenomenon boosted by liquidity which continues, which is at the same time gold and Bitcoin are moving higher. Call it the impact of Magnificent Seven. Nasdaq made a new high on Friday. It made a new high on an intraday basis yesterday and then closed flat. So both in terms of the technical setup, in terms of the market setup, I guess markets are moving as per the script, and that's what you want to say. If one really looks at the trader screen, which is what we will do just to establish the mood point this Tuesday morning, global cues are mixed with positive bias. Net flows, both FI and DI, it continues to be constructive. And because large cap stocks are outperforming after that giant rally on Friday, I think short covering, is clearly evident. So the setup is something which is encouraging, and that's what you want to see. What puzzles me is this good old equation of Bitcoin versus gold, why both of them are moving at the same time. But I really don't have a real answer.
Yeah, record highs there for when it comes to the futures for gold, and we'll have to see how the rest of Wall Street pans out. But for now, it's been a pretty smart 1 year move that we're clocking in for these different asset classes. But let's talk about the strategy for the day, because Nikunj, it seems that while we are seeing HDFC Bank continuing to remain a muted performer, an underperformer, the Nifty Bank Index has been gaining, and more importantly, the large caps have been at the forefront.
See, the magical name for me this year so far has been Reliance, and we are looking at a 15% move in Reliance, and a 15% move in Reliance is not a mean feat. And on top of that, if I add what has happened to Jio, I guess this year so far Reliance has managed to really hit out of the park. So that's the leadership part. At the beginning of the year, all of us thought that private banks will make a comeback and HDFC Bank in a sense will assume some kind of leadership. So that clearly has not happened. Large cap stocks are moving higher. Nifty is making a new high, despite the fact that very little support is coming from private banks and especially from HDFC Bank, which was supposed to be the engine stock of the year. So that for me, I think is the most important key takeaway. I guess now what you may see is that markets are slightly moving into what could be called as a pre-election phenomenon, which is that you've seen, let's say, emergence of power as a theme coming back. You've seen, you may see emergence of cement and steel as a theme coming back. You may see power ancillary as a theme coming back. You may see some rural-dominated sectors which may make a comeback. So for me, I think there are two things which are important here. If you're a trader, well, it's large cap all the way. Banks, which was supposed to make a comeback, well, they've not really made a comeback despite markets have made a new high. Reliance is a surprise mover, but markets like it because that is Reliance. If it moves, it will have its own halo effect. And then I guess what could be called as a pre-budget typical pre-election rally or pre-election moot point. It's empirically evident looking at what's happening to power, how steel and cement could be the next one online, and I think the next one after that really could be rural and agri.
Yeah, absolutely. That's what the F&O picture is looking like. But the big news maker clearly has been Tata Motors. The demerger got announced last evening in a surprise move, and the two listed companies are going to be commercial vehicles separately and passenger vehicles separately.
Okay, so let's understand what are they trying to do. For a company which was struggling to pay its debt, is now looking at splitting its businesses, and it's coming from the Tata stable. Why are they splitting the business? I guess that clearly means that the Tata group feels that the businesses can really run independently, which is the passenger business, EV, and the CV business. So these businesses can run independently, and these businesses will have enough cash flow so that there is no interdependence on each other. JLR, with the kind of debt and with the kind of cash flow they had couple of years ago, it surely needed the balance sheet support of Tata Motors per se. It could have not run independently. But that messaging, I think that downtick in the stock or downtick in the JLR business, that's over. EV business is scaling up, and the CV business is where things are looking up. Now, for a shareholder, what it means that it will take 12 to 15 months. It could take 3 to 4 quarters before the necessary approvals will kick in. You will get two separate companies now, the PV business and the CV business. The PV business will have the local EV business, it will have the JLR business, and all the new launches which Tata Motors in a sense is now cemented in the EV business, they will be part of the passenger car business. So, but why is Tata Motors doing it? My sense is that they are purely looking at unlocking valuations here. If one looks at the PV business in India, and if you use, let's say, Maruti as a benchmark or even Mahindra as a benchmark, I guess the Tata Motor PV business could be commanding higher P multiple. We also understand that somewhere in 2024, Hyundai could go public, and we've got indirect confirmation from the management already. So that in a sense sets the benchmark, and the PV business could be commanding different valuations. Then as the EV business, you look at what Leyland is commanding and what other global players are commanding. Tata Motor has a large market share in the CV business, it could have a commanding share. So I think 12 months from now or 18 months from now, when you look back, I think these businesses will trade independently and they can command different P multiples. In the near term, the stock may not see any kind of an halo effect because ultimately the process is still 12 to 18 months away, and then the price discovery will happen. And before that, there are a lot of factors which could be at play for a performing stack like Tata Motors. But what amazes me is this ability of this company to just come up with something new.
Yeah.
DVR, split of the business, listing of Tata Motors for a company which was plagued with debt. It almost looked impossible that there would be a turnaround. Just how operating leverage, cost efficiency, subsidiary listing, they've really created valuation, a true wealth for shareholders. The stock had plunged to double digit at COVID crisis. It was at sub 50, 60 rupees when late Rakesh Junwala increased his stake, and look at it.
Yeah.
I mean, that man had the ability to see things, I can tell you.
Yeah,
Yeah,
foresight
as
and
does
vision.
Chandra, but clearly, it's a foresight and a roadmap for
Yeah.
Tata Motors going forward. Just to put it into perspective in terms of what brokerages are saying, while they say that this is not going to be